Morning! Loud, wasn't it? So as you can see, my whiteboard is finally here today, and I wanted to kind of tag in something. It's relevant to all industries, happens a lot in mortgages, and the reality is that people always want to be the cheapest, they want to be the fastest, whatever it is, they always want to try and do the thing that makes it most convenient for them. And the reality is we all do. And anything that we do and partake in, we always want to have that convenience of what makes it simple for me. And so, in my instance, I was actually looking for a whiteboard. As you can see, I have one now. So, looking for whiteboards that would function for me. Needed at least 4 feet that came with it. And so, I looked online. Amazon popped up first. All the good searches. They were a little bit pricier, 70 to 80 bucks. And so I said, okay, I'll do this. And then I said, well, hold on, let's just look somewhere outside of Amazon, because sometimes Amazon is not the cheapest. Well, I found a couple, actually one in particular that was off by 20 bucks. Now, 20 bucks doesn't seem like a lot, but in regards to buying something, including shipping and everything else, 20 bucks goes a long way. So I put my order in. It's a B2B website, so it was allowed me to order through my business. And I put the order in. I get the email and confirmation, hey, great, your order's been accepted, and you're good to go. Next day, I get told that the order's on back order, and I'm not allowed to cancel it for X amount of days. Okay, no problem, it's on back order, maybe it's just a day, whatever. 4 days went by before anything happened, and I get a call from the company asking for me to provide more information for my business so they can send me, or they can provide me better stuff. Well, first of all, I still haven't got my whiteboard. So at this point, after this call, I decided to go on Amazon. I found a whiteboard, actually, that was 12 bucks less than what the original ones I saw were on Amazon, and I bought it. And then 2 days later, it is delivered. I pay a couple extra bucks more, I get the thing I want, and now I have the ability to use what I want for it. And so, the reality is that I see this a lot. It happens a lot in the car world. It happens a lot in the mortgage side. I spoke with a realtor yesterday who said that a lot of her clients are scared in terms of thinking about payments and doing things. And it's because the first thing they hear initially is the thing that sticks with them the most. My wife is a good example of that too. Whenever you tell her something incredibly surprising up front, that's the thing that she'll live with until you provide the proof at the end. And it's a very hard dynamic to get out of, because what you do is you get in this situation where that's all you focus on. You remember the first and last thing, you don't remember the middle thing. And so, in regards to it, when you're doing mortgages, the reason why retail banks still happen to scoop up a lot of business outside of the jumbo world is because people who use them, people who talk to them, people who understand them, whatever, they say, oh, well, okay, Chase is giving me this, I'm happy with that. Chase my bank, I'll use them, whatever. Come to find out, their MI is more expensive. They're charging significantly higher interest than what the average is. They're charging you additional fees, whatever it is. And so then you speak with someone else and say, oh man, I got this through a credit union, I got this through my broker, and it's significantly less. And you're like, damn, I got bamboozled. And then the next time comes around, you decide to buy another house, do another mortgage, you go through the same process. And it isn't until you really feel that sour taste in your mouth that you decide to change or move out of that area of discomfort. And so it's incredibly important. I can tell you one of the biggest things, just generally in finance, whether it be cars, houses, whatever, hearing aids, you run into a dynamic where people, if they don't understand, they won't do it. And if they pretend to understand and don't ask for additional clarifying information, they really won't do it. And then you're stuck with a lot of objections that come with it. So it's incredibly important to tag down or to clarify or demystify, crystallize, however you want to say it, the importance of understanding what you're doing. You don't have to know ding-dong the mechanics of how an actual contract functions. You don't have to ding-dong on every reg or every regulation out there as a consumer on how it functions and mitigates or prevents you from doing certain things. Know that laws and regs are in place, right, that help protect you as a consumer. But you have to also understand that when the consumer doesn't know something, they're not going to say, I don't know. And it's a stigma that we have of fear of not knowing. Really asking, forcing people to teach you questions, ask them questions, and just being incredibly humble about the situation of not knowing is not something that is a common practice in today. And so you, as a LO, have to really dive into it in a proper way, right? And make sure that you can kind of cover those components that come with it. And really, it's asking good questions. The more questions you ask, ultimately, by proxy of asking the questions, you're going to have a more educated buyer that comes with it. Because if you start asking things that don't typically get asked, right? As long as they're legal, you can't ask certain things about marital status, etc. But long as you're asking the questions in terms of, hey, in terms of your home buying process, what have you guys looked at in terms of information? What education do you have on, the loan process? This is your first home, whatever. If you have done previously, tell me a little bit about that experience so I can understand what you did like, what you didn't like. I'll just tell you up front that I'm a professional. I'm always going to operate and function the way that I need to. But I want to make sure that if there's anything in particular that you need help with or you need understanding on, please don't hesitate to ask. This is a room of no judgment. This is a conversation space for no alienation. My goal is to make sure that you have the best information possible to make the most informed decision. And if that works for you, Mr. Customer, Mr. Client, I'm 100% okay with that. So treat me like a tool, treat me like a resource, go above and beyond, and let me know what I can do to make it happen for you. And that's the reality of really how it functions. And I guarantee you, if you have those conversations, no different than when you're doing business to business, when you're doing, business to consumer, whatever it is, you'll never have a problem with the person you're talking to on the other side of it in a sales negotiation or conversation. And the reality is just simply because most people want to be taught, they want to learn, they just don't know the proper avenue of asking the right questions to get that information. And so you have to be really unassuming with it. And I can tell you, in the purchases of our 2 homes, our second LO was probably one of the best guys that we dealt with ever in terms of buying anything, cars included, and I've sold most of my family cars. And it's simply because, albeit at times, how he came across was a little condescending. It wasn't intentional. It was just when I explained kind of my background, he still explained to me like I was 5, and I'm appreciative of that because it put it in jargon that I knew versus the technical jargon that he was using at the time. And so, again, those experiences stick with you. And the reality is that you need to make sure you exemplify understanding the process versus just getting them through the process. Because an educated buyer, if you have someone come out that feels like they got a good deal, better education on the process, I guarantee you when they decide to buy their home, whether it be in 3 years, 13 years, whatever it is, or refinance, etc., you're their guy. You're 100% their guy. And repeat and referral business is so significant to the book of business that you can create that really it would be a shame to miss on such small things. So just be super mindful that the cheapest is not always the best option. The cheapest is not always the fastest option. The cheapest does not always guarantee the product that you're going to get to it. And so kind of tailored it back to the fact that I went with the cheapest initially on my whiteboard. I still haven't gotten it 2.5 weeks later. I spent a couple bucks more through a larger site, and I got exactly what I wanted. Maybe I paid more than what I wanted to, but now I have my whiteboard here to do things with. And so keep that in mind. Use it as a very just good concept, really. Mortgages, everything just in general, and it puts you in a pretty good spot. So there's some reality to it as well, that the more you do, the more acclimated you'll get to feeling comfortable with kind of educating and teaching people the right way. So muscle memory is really kind of the important part to all this and getting reps in. So if you're a newer LO, just know the reality is you're going to probably have to do this 10, 20, 30 times before it gets fluid for you. But just know the more willing you are to help, the more sincere you are in terms of your assistance that you provide and the information that you give, the likelihood of you getting a better result is significantly higher. So the problem is you're not going to close 100% of the people that come through your door, that come through your application process, your pipeline. But those people know people. So if you create a good experience, even if you don't make it happen with him, you now have someone who's going to potentially send you people down the road. So to that point, just super helpful information. It's something that you can apply really across to any industry that comes with it. And I think for the most part, there's a lot of people who may or may not understand that concept alone with it. So we'll jump into mortgage rates. Jump into mortgage rates a little bit today. So let's see if we can move this. We'll move this down here. So it looks like our rates haven't changed much. Hello. Changed by 1 bip yesterday. overall, it's been steady Eddie for the most part. We haven't seen any real low sixes on the 30-year fixed. I mean, it's floated in the sevens a little bit, but high sixes, low sevens for the most part. So, again, kind of tagging on it again. It's important to know that obviously we like the fact that there's consistency in the rates because it gives us a better idea to explain to our buyers. Obviously, we want cheaper money. Cheaper money is always better for us, which means once that wave hits where rates do drop significantly, we'll probably see a larger uptick in business. But it also lets us know that no one's making any real inane or insane movements one way or the other. So hopefully this will change sooner than later, because obviously cheaper money is always better for us, gives us some more opportunities with it. But I'm not drastically mad at the circumstance with it. So we can even break it down a little bit further if we wanted to. We'll jump into some different deals. So of course your 15-year fixed, a little bit less in it. So if you have someone who has the capital or the ability to pay, 15-year might be the way to go. In terms of it, 644 is not significantly better, so you could still do accelerated equity on a 30. Do a biweekly payment, something of that nature, and probably still get the same amount of savings that came with it. So, and then of course refinance options. So, 15-year fix isn't significantly more impactful, I think, in terms of the rate, what they'd be saving, especially with the way that you can itemize your 30-year note to pay it. So, your 7.6 SOFR actually decreased a little bit. Middle of the road in terms of averages right now. 30-year FHA and 30-year VA, both down in terms of the rates. So if you do have first-time buyers, if you have someone that qualifies through one of the FHA programs, 648 is not that bad. And then of course 30-year VA. A lot of vets right now who have their CEs could potentially go pick up some business and make something happen with it. So that's on a $250,000 loan. Let's just say that we go to the average, which I think is 465 right now in the U.S. Nothing really changes in terms of it. Payments obviously go up, but gives you some flexibility there in terms of it. So we will post this real quick. Let's see. Create post. Let's just do it this way then. La 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 la. Save as. What is this? 626. Okay, 626 MDS. Upload media. Bum 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 bum. Much of an adjustment. Month. Publish. One thing that I think people forget a lot about too, is the amount of mortgage products that are out there, and really a significant one that gets neglected a lot is mortgage insurance, right? There's some people who will give you flat rate mortgage insurance, or some people who give you percentage based, and of course, it all goes into the factor of what you're paying overall for it. So you have to be super mindful of those things. Really understanding your money is super important. Understanding how your money can be accessed is super important to you. I know we've talked about it before, but like building equity inside your house and then using that equity to do other things. It's an incredibly fast way to establish other opportunities while still living in a home and not breaking the bank and not doing anything that would put you in excess of what you're currently doing. Which, when you're looking at today's culture, society, whatever, having that freedom can liberate a lot of stresses that come with really anything and everything that is involved. So just be mindful of it. Obviously, you can do things like if you wanted to get into a mortgage and you're going to be a short-term buyer, your adjustable rate mortgages are huge. You can do a 2-1 ARM, which is pretty standard in terms of it. You can structure up your payments to do smaller payments kind of upfront, and then of course adjust as they go. Which, with the way that everything is working in terms of your bonds, etc., that might be a safer bet, because the reality is that your bonds aren't really getting more expensive at the moment. So gives you some opportunities to function and maneuver in different functions with it. Of course, home mods, bridge loans, construction loans, everything under the sun with it. You can even do some extensive stuff if you qualify through FHA that allows you a lot more maneuverability with it. And then of course being able to take advantage of what you have in terms of the real estate that you have with it. So a lot of questions that come into it. Definitely want to make sure that you answer the things that you have questions about before you act on them. I can tell you that in terms of the numbers and the market data, it does change frequently. It could change 6 times in one day. But it's important also to know that when you're making these decisions or doing things, that it affects you properly. So FOMO is a huge deal. I know people think about a lot. Oh man, if I had just done this sooner, or I don't want to miss it on this. And that's kind of the gimmick that people rely on, or lenders rely on, to sometimes get deals to kind of push across the thing, and you don't have to feel pressured into doing so. So make sure you communicate with a broker or someone kind of in the industry to answer those questions and talk about that stuff. So